So what you can do on these calendars, and it's really valuable, is you can enter orders as one order. So you can enter the order in Thinkorswim, or really whatever platform you have, as the spread. Pablo's going to jump on. He'll go over whatever questions you guys have. Pablo, would you mind starting off with like an explanation or a demonstration of how people could trade these calendar spreads by just putting one order in the market and working a limit order?
Yeah, absolutely. In front of you, I have a paper trading account. Yes, I do paper trade. I encourage you to do so. I have it my paper trading account open at the same time as I have my main account open. Just keep in mind that you can do that if you need to. So let's go to crude oil. I'm on my trade tab here on Thinkorswim, trade tab, and I'm going to change from ES to CL. Okay, but by default, this is what it should look like. Right here where it says spread, you should change that to calendar. The other thing that you may have on your platform, mine defaults to all, but you may have yours set on 3-month only or on active only, and that makes a big difference. So for the calendar spreads, make sure you have it set to all, and make sure you have this set instead of single on calendar. Now we get to have fun. This shows us every single crude contract. Over here to your right hand side, you'll have arrows that you could use to scroll up and down, or you can move this. Okay, so let's replicate our trade. CLM20 versus CLZ21. I opened up the CLM20 because that is the first leg of our spread. Notice that immediately after I open up the June contract, there's equal sign that appears in front of these names. So we have equal sign CLM20 minus CLV20. That equal sign is what you would need to copy and then paste up here to plot the calendar spread. Okay, you could also do it without the minus sign, and it should plot something similar. However, this is not plotting the single-legged calendar spread that we're about to do. I'm going to scroll down, noting the volume, for example, on these calendars. So the June 20 versus December 20 has traded 13,000 contracts today. That's good. Now let's go to our Z21, scrolling past it. Here it is. This has traded 120 contracts today. That's a lot. Normally this calendar does about 10 to 20. So now that I have it highlighted, if I want to buy this spread, all I do is right click on it and hit buy. Okay, notice that a single order ticket appeared on my screen, and it is denoted by future calendar. Just like if you were to go do a vertical spread using options or a covered call using stock and options or whatever, this is one of those types of single ticket trades. Right now, the spread is this calendar spread is trading for negative $8.28. The way we can validate that is we could look at the price of our M contract, which is right now trading for 30.70. And if we scroll down and find our Z21, this one is trading for 38.96. You could kind of see how the difference between the two is approximately $8. So if I wanted to buy this, let's say right now at market, I don't recommend you do this as a market order, but if you wanted to do this as a market order, you just route that baby in just like that, and you're executed. So we just filled a single order, but the result in our positions is +1 of the M20 and -1 of the D's 21. Okay? They call their future calendar spreads this. So I would type in CLFTS, future time spread. And then I would do, let's say in this case, plus M20, comma, minus Z21. This is the notation that CME uses. If you're not using Thinkorswim, you may find this notation, FTS, future time spread. But I would speak with your broker about their support for single ticket calendar spreads or not. Here's the other thing that I wanted to show you. Now, I just entered into this as a market order, but let's say that I want to do it a little bit differently. Okay, so I have my order here, and rather than using a market order, I'm going to leave a resting limit order, let's say at -10, okay? So that if this hits while I'm sleeping, if price hits this amount of spread between the two contracts overnight while I'm sleeping or in the middle of the day, I know that my order will be there. So also changed from a day order to a good till canceled order. Now here's a cool part. We're going to change this from single order to first triggers sequence or first triggers all. In this case, I'll pick first trigger sequence. Then what I'm going to do is right click on this and select create opposite order, my offsetting order. So I would like to buy this back, let's say when it goes to 7. Also as a good till cancel order. So when I click confirm and send, what this is going to do is it will leave a resting buy order for this spread, such that if it hits 10, it gets me in at 10, and then right after this order is triggered, first trigger sequence, right? Look at the name of the advanced order type. Once the first order is triggered, then this sell order triggers also, or gets placed in the market and will be a good till cancel order. So if both of these execute, that's $3,000. And I use this extensively to manage my position. So like, let me wrap this order, and we now have this order over here, the first one, that is working. The mark is currently at 828. And then this other order says wait trigger, wait TRG. Why does it say that? Well, because it's waiting for this order to be triggered. If you want to see that in action, let me move this to the same price, 828. All right, I made it trigger. So now we should see that automatically we have this sell order, which is now working. Assuming that this had been filled at 10 rather than at 828, you can now go about your day knowing that if when these levels hit, you're going to be in the position and then out of the position.